I'm Danielle and I'm the Director of Options here at Simpler Trading. So you may have noticed there's been quite a lot of volatility in the market over the course of the past week and a half. And I'm sure that leaves you with two questions. Number one must be, what happened? Number two, very important, and I think the most important one here, is where do we go from here? So let's start off with the first one, and then I'm going to get into what my game plan is for how to trade this market pullback. So first of all, everybody always wants to talk about why the market is falling, okay? It's, a question that I get every single day, but at the end of the day, you have to realize that the market is a market. And what happens is when it gets too lopsided, one direction or the other, it's going to cause some large movement. So for me, looking back at the market before it started pulling back, I can tell you there were a few key factors that let us know that we needed to start lightening up our longs. What were those? Well, number one, the market was extended to the upside. We love to use Fibonacci extensions around here, but you can also just look at the fact that the market had traded higher in reality about 3 to 4 weeks. This is extremely rare and very unlikely. And just like a runner running up a mountain, it has to take a breath of fresh air. It cannot just go straight higher. The other piece of that is that when that happens and the market just goes higher and higher and higher day in and day out, everyone who wanted to get long is then already long. And you know what that means? There aren't a bunch of buyers to come in and continually push the price higher. So what ends up happening is as the price goes higher, it starts to kind of stagnate. You can see that in the price charts in the S&P, whatever index you like to use. For me personally, I like to use the S&P, the NASDAQ, and the Dow. You can also see that with the put-call ratio. The put-call ratio will tell us that there are a lot of longs in the market when we need to be cautious. So these factors all combined kind of tell you, hey, you know what? It's time to lighten up. You never know exactly when the pullback is going to come, but you know what's a great catalyst for pullbacks? Trump tweets and China trade news. So the Trump tweets about the escalating trade war with China came in at pretty much the perfect time when the market was really ready for a pullback. So while I would say that the market needed a pullback and it would have pulled back probably anyways, because of the impact of those tweets and the way that they hit on a Sunday night, and because of the surprise that they sent through the market, what we got was a pullback that was more severe than I think most of us were expecting. So that gets to my next question, which is, where do we go from here? So we know we have a strong market, we know we have an extended market, we know we got a pullback, and the catalyst for that was Trump tweet, escalation of the trade war with China, but that still leaves us with here we are today, and what do we do? So for me, whenever I'm looking at a pullback, first of all, I am a trend following trader. I love to buy pullbacks in the market. The main problem with that is you don't usually know exactly when the low is. So you can try to add in on the way down and add in on the way up. And of course you can try to pick the perfect low, but it can be a little bit tricky. So just beware. But the main things that I look for is what was strong before the market pullback, okay? You don't want to just buy anything. When you're going into the marketplace, you need to think just like you do when you're going shopping. You don't want to buy something the first day that it comes out when it's full price, when it's going to be on sale, a month later. Same thing in the stock market. You don't want to come in and buy the highs. So right now is our perfect opportunity to pick up some sales, but you have to do it the right way. You don't want to buy something that is falling apart and it's not going to last very long. So what you want to do is you want to look at something that was strong previously and just experienced a drop with the overall stock market, but will likely carry higher after the fact. So where am I looking for that? Well, I look at sectors and industry groups that were previously strong and that are going to catch some strength. For me, right now, my favorites are tech, consumer discretionary, and communications. This is going to be XLK, XLY, and XLC. Why do I like those? Those were the sectors that were rallying very hard the majority of 2019, and when they fell to key resistance. They hit and they held, and you guessed it, they started trading higher as of today. So those are my favorite sectors. Within those, I love to stock pick. I like to focus on the strongest stocks within the strongest sectors. You can learn more about this in the class that I taught previously called Finding Phoenix. I love to look for Phoenix stocks that look to rise after a market downfall. So, what are my favorite stocks that are rising? Typically, always Microsoft and Amazon. But today, I've really been noticing that the cloud computing industry, as well as the cybersecurity industry, are starting to fly sky high. So, a couple of my favorite picks from there include MDB, ZS, PA&W, TWLO, and just the overall industry in general. So, if you want to learn more about this, I'm going to go ahead and switch over to the chart segment where I'm going to go into detail in a couple of these names and show you the technicals that I'm talking about. So for those of you who are joining us on YouTube, this is where I leave you. For my foundation members, I'm going to jump over to the chart segments. If you would like to get the full episode, please come and join us at www.simplerfoundation.com, and I'll see you in the next episode.